Hey, Bulls and Bears, let's talk about the shocking information. I think it's pretty shocking, pretty alarming. The amount of credit card limits that are available to people, to individuals that have credit cards, has just increased. You would think, with everything happening right now with the delinquencies, the defaults, the overall debt levels, you would think that credit card companies would be cautious and start cutting credit limits. Now, we warned here right on this channel that when credit card companies start cutting limits, that's going to be the beginning of the end. Now, we're already in the beginning of the end, but it's been very slow because we still see consumers able to spend. And why are they able to spend? Well, we said it right here in this channel, because of debt, because the availability of credit, also known as debt, once credit's converted into once you make a purchase, is basically debt, right? And hopefully you can pay it off every month, but a lot of people are not. So this game can't last forever. And with this staggering increase, in my opinion, of credit limits, they're just prolonging the inevitable and the agony here. This is out of Global Finance Mag. Credit card accounts expanded by 5.48 million, and this is during the second quarter here in 2023. So an added 5 something million credit card accounts were added to the economy, while credit limits total increased by $9 billion. Now, collectively in the United States, people have $4.6 trillion available credit. Think about that. $4.6 trillion available credit. We only have a little over 1 trillion in credit card debt. I shouldn't say only. That's a lot. That's a record-breaking number. That's way worse than we saw in 2008. In fact, before the financial crisis hit, we were under 500,000. We were under 500 million total credit card debt. Now we're over a trillion. So we've more than doubled the financial crisis levels. And, this is now 4.6 trillion available credit. So people have $3.6 trillion now to run up on credit cards, right? So available credit's 4.6 trillion. The debt's 1 trillion approximately, credit card debt. So people have a lot of credit card credit available, basically. When are the credit card companies going to start being concerned about the levels of debt, about the delinquencies that are increasing, the late payments that are increasing, right? We've got things unfolding now that are really going to change the economic landscape here very rapidly as we go out, as we round out or close out 2023. I say close out, we still have 4 months to go. But I think this last 4 months is going to be very, very dramatic, financially, economically, all of the above. The average interest rate is high, and 60% of people with credit card debt have had it for at least a year. Think about that. 60% of people with credit card debt have had it for at least a year. So not only are they not paying it off every month, they're carrying debt for a year. That's massive, folks. That's most people. That's why I try to remind people here, if you're someone that pays off your credit card in full each month, or you don't have to use a credit card, maybe you pay for things in cash, you're a small percentage of the population, right? Most people cannot do that. And it's backed up here by this article, GF Mag, if you wanted to check out that article. Compared to other categories like student debt, a segment where balances fell by 35 billion, well, some people had their loans forgiven, and stood at 1.57 trillion between the first and second quarter, the rise in credit card balances was starkly worse. Still, despite the toll inflation has taken on consumers, currently the U.S. inflation rate 3.18%. That's false. That's really an understated number. There's little evidence of widespread household distress, the New York Fed noted. Think about that. Little evidence of household distress. The New York Fed said that. No, if the Fed said it, it's got to be true, right? I'll wait while you laugh. Folks, let's take a look at what widespread household distress there is when they're saying there isn't. Well, let's take a look at maybe some information that says there is some pretty widespread household financial distress. Well, here's something here. Just came out 1 day ago out of the WAPO. Delinquencies rise for credit cards and auto loans, and it could get worse. That's the headline. More Americans are falling behind on their car loan and credit card payments than at any time in more than a decade, in troubling signs, right? So that directly contradicts what the New York Fed is out there saying. Pretty interesting, right? So maybe the New York Fed didn't read that particular piece of data. And I think what you'll find is that a shocking number of people that took out mortgages in the last 3 years are basically using credit cards as a lifeline. Yes, they're still paying their mortgage because they know that they won't have a roof over their head if they don't. So, of course, the mortgage is going to be the last thing that people skip out on. But right now, we're seeing credit card debt just go up at increase at an astonishing pace, right? And how many of these people bought homes, and the reason they're using credit cards so much is because they don't have the extra money, and if they pay off their credit cards in full, they won't be able to pay their mortgage, right? So pretty serious things going on here financially with this credit card debt, and delinquencies are rising. So the fireworks will be bright and loud, I think, in the last 4 months of 2023. And not only did people run up another massive amount of credit card debt, U.S. consumers paid for July spending spree by burning up $150 billion in savings, right? So the savings rate dropped once again, and we're already at near 50-year lows, and it just dropped again. We're now down to 3.5, 3.5%, folks. That's very, very low. In fact, we were just under 35% in mid 2020 when people got money sent to them. They didn't have to make their payments. Things were shut down, so people really couldn't spend money in some cases, even if they tried, or they were too scared to go travel and do things and spend money. You know the story. But from 35 down to 3.5, folks, that's pretty shocking. So not only are people running up massive amounts of debt, record-breaking amounts of debt, they're also burning through their savings. Now we're going to see the savings rate continue to plunge. And if I look back here at a long-term chart here, we were at 2.6 right before the financial crisis. I think we're going to plunge below that. In fact, you have to go all the way back to the mid 80s to get anything else nearly this low. And even back then, it only got to 4.5. So this is danger zone, danger Will Robinson territory right here, folks. And, they can find new ways to kick this can and create more road to kick the can down. Absolutely. They could put a freeze on all credit card payments. Speaking of freezes, let's talk about what happened up in Oakland, right? Let's transition a little bit here. AP report right here. Tenants say a 3-year ban on evictions kept them housed. Landlords say they're drowning in debt. Folks, up in Oakland here, Oakland, California, they still have not ended the eviction moratorium. Retiree Pamela Haley has paid property taxes, insurance, and other bills on a house that she lets out in Oakland. But for more than 3 years, her tenants have paid no rent thanks to one of the biggest and long-lasting eviction bans in the country. Folks, 3-year eviction ban. They're saying it's finally going to expire next month. We'll see. The eviction moratorium in the Bay Area city expires next month, and Haley, the landlord, can't wait. She estimates that she's owed about $60,000 in back rent. $60,000. She doubts she'll ever see the money. She's very lucky or fortunate or skillful to still have that home after not getting rent for 3 years. Folks, how many other cities out there are doing this? And people think the economy's fine. If the economy's fine, why do we have to have cities 3 years after the health crisis still with an eviction moratorium? I thought the consumer was strong. We're told by the experts that the consumer is strong. If the consumer's strong, why can't they begin repaying their student loans? Why do we have a 3-year hiatus on student loans? Why do we have 3-year hiatuses on rents in some cities like Oakland? We're talking about millions of people collectively, still not paying their rent 3 years after this. This is completely insane, people. All right, now I want to mention something here. Some people hear me talk about these things and they say, oh, JJ's insensitive. He wants people to become homeless. He wants these people to get thrown on the street. No, that's not what I want. What I do want, though, is affordable housing and rents that aren't so high that just people can't afford it. I mean, we have to have eviction moratoriums, right? The reason we have to have eviction moratoriums is because rents are too high to begin with. Why are rents too high to begin with? Well, yes, there's greedy landlords. There's a lot of different ingredients here, but a lot of it has to do with the cost of living. Taxes are outrageous. Insurance is outrageous. Everything's outrageous. So, of course, the landlords have to charge a lot of money. Yes, some of them are greedy. Some of them are overcharging, especially when you look at the big investment companies that buy up thousands of homes a year and rent them out. Greed exists. It's real. Absolutely. I'm not denying that. But the cost of living is also a factor here that we have to talk about. Why is the cost of living so high? That it all goes back to the system of money. We have this money that's created out of thin air, and throwing money at the problem for decades has caused more problems. It's caused the problems to become worse. The cost of living has gotten so out of control that close to 60 to 70% of people now are living paycheck to paycheck. But nobody can really look at, the situation and pinpoint exactly what it is. You have to go back to the source of the money, right? The money that can be created out of thin air, trillions of dollars at the click of a mouse. Folks, you've heard me say that before. You know it. So ultimately, yes, we're going to go back to sound money, and it's going to be backed by something tangible. I think gold and silver both. And people that are holding those assets right now are going to be very, very handsomely rewarded. But will you be able to survive between now and when that finally happens? And I think it's going to happen here in the next, if I had to put a timeline on it, I'd say the next 4 to 6 years. That's my timeline. Going back to hard assets. We already see a lot of countries out there, the BRICS nations out there, talking about reintegrating gold. Right now, they're, for the most part, trading within their own currencies as far as national currencies, trading amongst one another, but outside of the dollar. That's the key part of that with the BRICS nations. But also talking about gold and having a weight of gold tied to the currency. It hasn't been introduced yet, but I think that's the next logical step, and where we're headed at in the global monetary system, right? So we're headed back towards a deflationary environment, but first we're going to see a lot of pain, a lot of inflation. Cost of living is going to throw a lot of people on the street. I hate to say that, but I just want to put out my, my honest thoughts and opinions on where I think we're headed, right? Because I want people to be ready for this. 3-year ban on evictions here. Why do we need that if all the consumers are doing so great right now? Well, with the state of the U.S. consumer right now, a lot of people are shopping at discount stores, dollar stores, Family Dollar, though, and Dollar General. Let's talk about these stores here. Dollar General shares tank after another disappointing quarter. Yes, you have a lot of shrinkage, a lot of people getting the 5-finger discount, walking out of the stores like Dollar General. If anyone's invested right now in retail, I would be very, very careful. If you see maybe a dip buy opportunity where a stock drops by a whole bunch, I have to see a stock drop by 80, 90% right now before I would step in there. And if you do step in, that's also risky because stocks that drop that much, there's usually a reason. But if it's a well-known, well-run company and you see a big sell-off, it may be a dip buy opportunity. But as far as retail goes, I'm really staying away from those stocks right now. Even a dip buy, I would really have to look into it, see how much cash they have set aside, and really think about that. But Dollar General shares tank. Shares of this company have fallen 36% this year, making it one of the worst performers in the S&P 500 in 2023. People thought the dollar stores, it's not a dollar store, they sell stuff for more than $1, but they thought these discount stores like Dollar General was going to be the safe haven, during these times, and other stores like Walmart or the Dollar Tree and other, low-cost retailers. Look what's happening at Walmart with the theft problem. We just talked about it in our last video. My Walmart location, one in my neck of the woods, I should say, not the one closest to me, but one in my neck of the woods, lost $1.4 million last year on shrinkage, aka people taking things and not paying for them, right? See my last video. If you haven't watched that, please check that out. Also, speaking of the last video where I talked about Walmart, somebody at Walmart told me the amount of items that are taken from the store. Some of you said that this is done, I'm trying to think in comments, you said this is done on purpose. The stores are doing this on purpose. They're just letting people walk out with stuff. And I have to scratch my head at that. I mean, more than one of you said that, though. A few people said that this is by design. This is done on purpose. They're letting the criminals get away with this. So if they just wanted people to take stuff and not pay for it, why are they locking anything up? Why not just open up all the cases and just let people walk out with it? So if this is planned or by design, you'd have to convince me with a little more information on answer the question. For one, why are they locking things up if they just want people to swipe everything out of their store? That doesn't make sense. But maybe you can let me know down in the comments, what I'm missing on that. But nonetheless, it's a big loss for that particular location, and it's got to be just as bad or worse at other locations. And it's only going to mean prices are going to stay elevated. And, a lot of people rely on Walmart as a low-cost go-to place to go shopping. But is Walmart going to be low cost anymore? Well, when you compare it to the other stores, yes, it's cheaper than Target. It's cheaper than some other retailers. I know there's Meijer. Meijer's a big store, kind of like Walmart, kind of like Target. We don't have it here in California, though, but I remember Meijer was a big store back when I lived in Michigan. And that's similar. So I'm sure they're seeing similar things happen. We've got a lot of Walmarts that have closed down, especially in the Chicago area of Illinois. And the more of these stores close down, the more the thieves are just going to go to other locations. And then you'll see other locations that really didn't see bad theft problems, probably have their theft problems really skyrocket once these other locations close down. Once they're hit so bad, they just have no choice but to close their doors. All right, moving on here. Guess who's bracing for a severe economic downturn, folks? That would be Warren Buffett. Berkshire Hathaway sold a net $8 billion of stocks and slowed its pace of buybacks in the last quarter, sparking a 13% rise in its money pile to a near record $1.47 billion. Now, some people say $8 billion. They sold their stocks. $8 billion, that's not that much for Berkshire Hathaway, which is not. But when you look at the history of Berkshire Hathaway, they're close to their all-time record of cash. Now, Buffett's been known for having a lot of cash ready to go when the downturn hits. So could this be something else that he's right about? Are we on the verge of something big, maybe a big economic downturn? Is Buffett going to be right once again? Also, how are things looking on the street for the average U.S. consumer? Well, listen to this. Consumer confidence cratered in August, falling from a downwardly revised 114 to 106.1. Americans don't think the economy is doing well, and all you have to do is look at the Americans' confidence. The expectations index, based on consumers' short-term outlook for income, business, and labor market conditions, declined to 80.2 in August. That reversed July's uptick when it ticked up to 88, right? So we've got a couple different things here, a couple different indexes that are telling us that a lot of people are not feeling so good about what's happening right now. So we've got the consumer confidence index, and we've got the expectations index, meaning people expect things to not improve and, in fact, to get much worse going into the future here. Right, let's talk about another gauge of the economy, which we have to follow pretty closely here because it's so important to talk about this here. Layoffs. Big announcement. Farmers. Boom, 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 boom. Farmers Insurance to lay off 2,400 workers across its entire business, folks. 2,400. Wow. I think they need to come up with a better theme song besides bum, 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 bum. Folks, it's getting bad here. Where are these people going to go work at? Are they going to be working at Walmart? Maybe they can be hired as loss prevention employees. Oh, that's right. They don't want to stop shoplifters. That's here in California. It's not like that in every state. So will California even have many Walmarts when this is done? It's going to be very interesting to find out. Anyways, I'm still here and doing okay, making it. So thanks everybody for being here, for supporting this channel, keeping this channel alive. Thank you so much. I'm going to wrap this one up here. I'd like to hear from you down in the comments. What do you think about today's news? The big increase in available credit. Credit card companies, banks are not dropping credit limits. When they do, that's going to spell big trouble. For now, they're still increasing the limit. Why would they be increasing credit limits at this time? Why would they want to prolong the inevitable? And why would a a bank or a credit card issuer want to open up that type of risk? Or do they know in the end, especially the too big to fails, the mega banks, do they know in the end that they're going to be rescued? Because the powers that be know that it takes debt to keep this economy functioning, basically, right? So maybe they know that, and that's why they can do that. So they're not worried. They're not worried about all the people that can't make their payments, and delinquencies are increasing. All right, everybody. Hope you're well. Bye for now, everybody. Keep stacking. Peace.